Ladies and gentlemen, welcome back to the channel. I want to go over a pretty unique opportunity in this video. An AI stock that could 50x in value, potentially 100x. I know, crazy, right? Wall Street doesn't know about this company yet. And I'll show you why that is, why it's so attractive, the massive institutional backing, and the massive market opportunity that this company has. If you don't already know, this company is Resolve AI. You probably never heard about it. If you have, you might have the wrong expectation of the company or wrong idea of the company. So Resolve AI is AI for the commerce market, okay? So the CEO breaks it down like this. If 10 people physically walk into a Nike store, 7 out of 10 people are going to buy something. If 10 people go to Nike's online store, only about 3 people are actually going to buy something. A lot of people put items in their cart and they abandon them. They walk away from those purchases for one reason or another. Well, Resolve is using AI to try to get higher, or lower cart abandonment rates, right? Higher actual successful transaction rates, okay? They have partnerships with Microsoft, Google, and Tether. They also have high ambitions of essentially making it so you can use crypto as easily as a credit card at anywhere, right? You could walk into Starbucks, get a coffee, buy it with crypto, and have instant settlement, and both parties are instantly settled, right? That's more of a long-term kind of thing. Now, Resolve, they say that they can boost online revenue at companies 10%. The average order value is 8% higher, 25% higher conversions, less than 5-minute customer wait times in stores, and drive-through service time at negative 50%. They have partnerships with all of these companies listed on screen. Liverpool, which is a massive retailer in Mexico. That was one of their big deals. Radio Shack, Joseph A. Bank. Okay, there's many of them. Okay, some even larger companies like KFC and I believe Home Depot are using the software as well. So, couple different elements. Brain commerce, right? That's the actual large language model. Okay, you ask questions and it is specifically tailored to commerce. Okay, we'll give you suggestions, all of that. And then you have the buy now option, which is brain checkout. Okay, seamless checkout, kind of like what you'd get at like a TikTok shop or something like that. Okay, so there's the website. You can check it out further in depth for yourself if you would like to. Now, here's the deal. They spent from 2016 to 2024 building this program. They spent a long time building the program. Last year, they only had like $180,000 in total revenue, right? This year is where it's actually being sold to, companies, right? This is the first year of real traction for the business because they weren't selling it in years prior. They were building it. So that's why when you look at some of their revenue metrics, they only had $185,000 in revenue last year. But what they're doing now is exciting. First and foremost, you have a market cap of $687 million. Look at this. Resolve AI locks in $70 million of ARR months ahead of planned. Now on track to exceed $100 million ARR by year end. That means if they can exceed or hit $100 million in ARR, nevertheless exceed that, they are trading at roughly a 6 to 7 times price to sales metric. That is cheaper than any of your other high-flying AI stocks right now. That is cheaper than BBAI. That is cheaper than SoundHound. That is cheaper than all of them. Name the stock, this is cheaper than those companies. There's a reason for this, and I'll explain it in just a moment. Now, also in recent news, Resolve AI will join the Russell 2000 and the Russell 3000 indices following a breakout year of hypergrowth and strategic alliances. And just for full transparency's sake, I do own about 5,000 shares in this portfolio and another 5,000 or so in a different portfolio. So when I find an opportunity, I like to invest in it. I like to go heavy in it. For an example, I bought IONQ, the quantum computing stock, at $7. It's in the 40s today. The same kind of logic here, right? We're going out, identifying value, and saying, hey, is Wall Street understanding the opportunity of this company? And if the answer is no, then we're taking stakes in them. That is what we are doing down below in the trading community. I did this with Applied Digital at $3 per share. The stock is over 10 today. I did this with Nebius at $20. The stock is now in the 50s today. I did this with Novartis Semiconductor at $2. The stock is $7+ per share today, all within the last like 8 to 9 months. I view Resolve as another one of those opportunities that the markets are ignoring. There's one big reason for this, and we'll get into that in just a moment. But first, I want you to listen to this like 2-minute clip of what the CEO said about Resolve. Like, this alone made me double down on the stock. Okay, so first and foremost, it is this video on YouTube. Okay, it says, this AI CEO just shocked everyone at the 2025 tech conference. Resolve stock set to explode. It's an interview with Resolve's CEO, Dan Wagner. And it only has 464 views on YouTube. Like, that right there makes me incredibly intrigued. I wouldn't say outright bullish, but intrigued. Like, the stock is doing something this large, and it doesn't have even retail investors that know about it. That's where the real opportunity is, because a small cap stock, a lot of firms can invest in smaller companies because they're deemed too risky. Okay. And if retail doesn't know about them, they're kind of just up in the air, right? They're kind of subject to the algos, right? The question is, if a company executes and continues to do better and better, eventually Wall Street will figure it out. Eventually retail will figure it out. And if you are there first, you're going to make the money. Now, I want to skip to the very end of this. Take a listen to what the CEO says here about Resolve, the stock actually exploding in the medium term. I don't think I've ever heard a CEO say this.
Offer it anyway. All right, so what do you think Wall Street's missing on your stock? You have A-list partners, not just Google and Microsoft, but also Tether. I think you have an incredibly thoughtful approach to improve conversion, an incredibly thoughtful approach to drive adoption of cryptocurrency to pay for retail. You just talked about your clean capital structure. You can fund your growth, excellent strategic M&A strategy.
So, well, it's another good question. I should expect nothing less of you, Tom. The answer to that is very simple. After a de-SPAC, most institutional investors stay away. They want to see what happens. They want to let the dust settle. So one of the things is simply that the institutional investors are waiting until a full year is passed, which I think ends up on August 17th. At which point we no longer have that de-SPAC constraints that come with having this into a SPAC, and they go away. And suddenly we are, operating purely as a US public company on NASDAQ, and we don't have some of the funnies that come with that first year. So I think that's one of the things. I think there's a lot of interest in the company from those institutions, but they're all just sort of standing on the sidelines right now. I think that presents a fantastic opportunity for other investors who are bold. I think we are sitting here as a, largely undiscovered diamond in the rough. I think we have tremendous potential for the stock to see quite extraordinary readjustment, positive readjustment. And so I think that's a good thing. I mean, I'm not concerned about it because we don't have we're not trying to raise money. We're not under pressure. The stock price is low, great opportunity for investors. If and when I am released from some of the constraints I'm under right now, technically, then I'm going to buy shares in the market myself if it's staying around this level because it's great value for money. And I'm hoping those restrictions will be lifted soon on me. But for everybody else, it's an open season and a wonderful opportunity to take a medium-term view on the value of this company and its ability to execute.
Wonderful. So you did.
Now, this article from Seeking Alpha, I want to just highlight this briefly before we talk about, again, what's keeping institutional investors away. You kind of just heard in that clip, it's the de-SPACing process. But I want to give you a little bit more details on that. And the one smoking gun reason I am so optimistic on this stock. But it says Resolve AI, building a growing moat in the $30 trillion retail market. Resolve AI PLC is showing a strong price recovery, up 50% weekly, and is positioned for sustainable growth in the $30 trillion retail market. Resolve's proprietary AI products are transforming digital retail engagement, validating by strong usage stats and strategic partnerships with Microsoft and Google. Resolve projects an annual recurring revenue of $100 million by full year 2025, supported by 16.5 monthly active users and 50 billion in gross merchandise volume. At a 6.5x projected sales multiple, Resolve stock offers significant upside potential as it scales, with valuation multiples expected to compress as revenue expands. So this company has virtually no competition in the AI-powered retail segment. That's why I believe the ARR is going to explode within the next year or two. Companies need to be using AI. And if you could partner with Resolve and really have 25% higher conversions online, increase online revenue 10%, all these stats you see here, it's well worth it for companies. The question is, why would you not be using Resolve? Okay, so from that perspective, lack of competition, clear, improvement to company fundamentals. You can even see BJ's, FedEx are, using the platform. It's only a matter of time before companies really catch on to this, that they need to be using some kind of AI in their operations. Men's Warehouse, right? There are some really notable companies that are already using the platform. Okay. New Era, right? I'm a big fan of hats, right? Hats. Office Depot, Mexico, Omaha Steaks. Again, you could kind of go on and on here. And they just launched this year, right? The start of this year, technically Q4, 2024, they started doing commercial sales of this product. Okay. So it's a very baby company in that regard. Already at 100 million plus for ARR by the end of this year. Okay, Discount Tire, another one. Okay, here's what I really love. Dunkin' Donuts, there's another one. There's a lot of notable brands here. Okay, but this is what I really love about the company. It's the ownership structure. Okay, if you look at the holders of this company, they are almost all executives at the company. Iger here owns 14%. Brooks Newmark owns 7%. Bradley Wickens owns 4%. Aston Wagner owns 4%. Coca Wagner owns 4%. Daniel Wagner owns 2%. Anthony Christopher Sharp owns 1%. Peter Vesco owns 0.5%. John Wagner owns 0.33%. Stephen Perry owns 0.29%. David Wright owns 0.2%. There's almost no institutional investors in this company. Morgan Stanley owns 81,000 shares. 15% of the amount that I own. And that's a, multi-$100 billion firm. There is literally no major money in this stock as of right now. It doesn't have a large retail investor ownership either. And that's the reason the stock is $2.83 and not $10+ today. So look, retail investors hold the largest share at approximately 42% of the company's stock. Okay. Insiders own 38% of the company. So you're already looking at 80% of the stock owned right there by retail and insiders. 80%. Whereas if you look at like Meta or something, it's 70, 80% owned by Wall Street, right? By the big guys. Okay. Private companies own 15%. So that's 95% of the stock. 95% of the stock that is owned by retail, insiders, and private companies. 95% of all shares. Institutional investors hold a smaller portion, with 46 institutions owning a total of 2.48 million shares, approximately 1% of the 244 million shares outstanding. They own in total, and this is a little bit outdated, they own about 5% of the stock outstanding. I can't recall any other stock ever that has 5% ownership by institutional investors. Can't recall any other company that, again, 80% of the stock is owned by retail and insiders. Huh? That doesn't even like sound right. It sounds wrong saying it. Okay. And then private companies, you're up to 95%. What happens when retail gets bullish on the stock, which again, retail doesn't like, there's not a huge retail base around the company. A lot of retail doesn't even know the stock exists. Okay. But what happens when retail gets bullish and institutional investors start to open up to buying the stock after the de-SPACing process, which is roughly August 17th of this year? I think that's going to be huge. Now, the de-SPACing process is interesting. So the insiders cannot sell their shares until a year has passed. That's why the stock comes under a bit of pressure after de-SPACs, like, because there is that lockup period that is so long that the fear is after a year, insiders are going to dump and the stock is going to get thrown to the wayside. I don't see that happening with Resolve. Is it possible? Of course, right? There was the same concerns with ARM, right? When SoftBank owned like a substantial chunk of the company, they could have sold everything. Did they? No. I don't think the insiders are going to sell in this company as well. And when Wall Street sees that, it's going to open the door for Wall Street to start buying more stock. And like the CEO said, there's other different reasons as well why Wall Street kind of is weary of de-SPACs. Just historical performance is poor. Also, again, the stock was $10 after the de-SPAC. It's $2.83. Like this is common with de-SPACs, right? But August of this year, those headwinds dissipate. And I think with an attractive valuation like you're seeing today, with an explosive growth company going from $185,000 of revenue last year to over $100 million of ARR by the end of this year, like the percent of growth there is astronomical. That's going to raise a lot of green flags in and of itself. Now, the company has very little debt to mention. Okay. They have a fine balance sheet. It's not even really worth talking about. There's nothing to really say there. Okay. They have like $15 million of debt. Like it's nothing. Okay. Resolve AI also recently reaffirmed their commitment to a $1 billion Bitcoin treasury plan. So they plan to add Bitcoin over time, which I actually don't love because a lot of these Bitcoin stocks, they trade based on Bitcoin and not based on what the company is actually doing. I like Resolve AI. I like the company and what they're doing. I don't want the stock to trade around a Bitcoin treasury plan. Okay. It's not at this point. Okay. But I hope they don't pursue this too much. Okay. A little bit here and there, like Tesla and some other companies do, is fine, but hopefully they don't pursue this all too much. And here's kind of the cherry on top. The company says that they will be break even, aka profitable, above about $90 million of ARR. So by the end of this year, the companies should be profitable based on guidance. So you have a situation where almost no institutional investors own the stock, okay? Heavy insider ownership, a de-SPACing process that ends August 17th, roughly, explosive growth with virtually no competition in an untapped market that's $30 trillion in size. I mean, what's there not to love? I struggle to find the bear thesis here. With, again, a baby company that just started selling their services that is on fire, right? The valuation alone, like if you look at something like Nebius, that's a stock I invested in that was trading, again, like 4 to 5 times sales at the time I invested in it, okay? Nothing has changed with the company since I first took that investment, but Wall Street has figured out the opportunity, right? So that stock now trades between 12 times and 16 times sales, depending on what their numbers come in as by the end of this year. That's their guidance range, right? Well, Resolve trades at like 6x sales, price to sales. It's trading at 2 to 3 times cheaper than something like Nebius. Just simple math sake would say that could put Resolve at, $6 to $8 a share, just if they have a similar kind of multiple to something like Nebius, right? Some of the other guys, like if you look at like an Upstart or something more outrageous that trades at like 20 to 30 times sales, like the stock could be substantially higher. This is a stock that I'm shocked is trading at levels it's trading at. I'm shocked it doesn't have retail or institutional investors that are jumping over each other to buy it. But I do think that is going to change very soon. And I think you're at the ground floor right now. And as the CEO said, if you have a midterm outlook on the stock, which is like 12, 24, 36 months, 1 to 3 year outlook, you're going to make a lot of money. The CEO says if the shares are at these levels, he's going to go out and buy the stock, after August. So, yeah, one of those crazy opportunities you don't come across all too often. Full transparency's sake, you can lose money when you invest, right? We obviously know that. Just to put that disclaimer out there, I have about 10,000 shares, so I am pretty exposed to this company. But based on my modeling and my projections, this company could be anywhere from $500 to $1 billion in ARR by the end of 2026, by the end of next year. If you assign, again, just a 6 times price to sales metric on that, which is roughly where it's trading at right now, that could be a $6 billion company by the end of next year. That, let alone what the projections would be for 2027, which you'd probably start to price that in ahead of time, right? That could be a $6 billion company. It's trading at roughly a $600 million market cap. That's already a 10x. I could see this company by 2030 doing $20 billion in ARR, right? It has no competition in retail AI, which has a market cap of basically any company that sells anything online, right? 20 billion in ARR times even 2. Like if the stock has a 2 times price to sales ratio by 2030, it could be a $40 billion market cap. I mean, that's why I say this is truly a company that could be a 50x AI stock. But hey, what do I know? Let me know your thoughts down below in the comment section. Even again, I think there's going to be a bit of a AI like euphoria wave coming, where I think AI stocks are going to see a lot more, capital right? A lot more investing. Wall Street's going to get a lot more bullish on AI stocks as rates come down, as the economy holds up, as we don't have inflationary pressures as they think we will by the end of this year. The big beautiful bill has large deficits, which is stimulative, and some of the, CapEx deductions on taxes, like being able to write off 100% of capital expenditures, is very stimulative. So you could even say like, hey, if we could get to $1 billion in ARR by the end of next year, times like nebulous multiples, call it 15 times price to sales, that could be a $15 billion market cap by next year. That in and of itself is over a 20x, almost a 25x from here. That could put the stock, at a 20x at $56 a share. I know, like, it could get insane if this company continues to grow, like, rapidly. Even at a 500 million ARR by the end of next year, which I think is well doable, times a 6x multiple, is a $3 billion company. It's at a $600 million market cap today, right? That is, just to put, again, numbers on this, that's a 5x from here on what I would deem kind of a average expectation over the next 12 months. Like, I don't think that's outrageous. I don't think that's undercutting the company. That's maybe what we get for 2026 end of year guidance, 500 million in ARR. To me, this sounds like an opportunity. And that, again, would put the stock at a 5x, about $14 per share by the end of next year. Doesn't sound outrageous at all to me. And it could get crazier from there. So again, let me know your thoughts on this down below in the comment section. Again, we are going out finding opportunities like this in the marketplace in core themes like AI, energy, robotics, and biopharma that I think are going to be core investing themes for the next 10 years, going out finding value in small cap companies before Wall Street figures out the opportunity and investing in them. If you guys want to do that as well alongside us, check out that link down below in the description of this video. With that said, have a great rest of your day, and I will see you in the next one.